Kioxia Holdings 285A Beginner's Guide. Every photo on your phone, every Netflix show on a streaming server, every chatbot answer from an AI model, all of it lives on a physical memory chip. Kioxia is the Japanese company that makes one of the most important kinds of those chips. This is a learner-friendly walkthrough of the business, not investment advice. So, what does Kioxia actually do? Kioxia is a top 3 global maker of NAND flash memory. NAND, spelled NND, is the type of memory chip that stores data even when the power is off. It's what's inside the solid-state drive in your laptop, the storage in your phone, and the giant racks of drives in cloud data centers. That's different from the memory that thinks in real time, called DRAM, which other companies make. Kioxia focuses on the chips that remember. The business splits into 3 buckets. The biggest, at about 58% of revenue, is SSD and storage. SSD just means solid-state drive, the fast, chip-based replacement for the spinning hard disks of 20 years ago. These go into data centers for the big cloud companies like Amazon, Google, Microsoft, and Meta, into server makers like Dell and HP, and now into NVIDIA's AI storage systems. The flagship drive, called LC9, holds 245 terabytes, roughly 50,000 movies on a single device. The second bucket, about 32% of revenue, is smart devices, NAND that goes into smartphones, tablets, TVs, cars, and consumer electronics. Customers include Apple, Samsung, Xiaomi, and Google for phones, plus auto suppliers like Denso, Bosch, and Continental. The third bucket, about 9%, is others, mostly retail SD cards, USB sticks, and sales through Kioxia's partner SanDisk. Total revenue in the fiscal year that ended March 2026 was about 2.3 trillion yen, which is roughly $15 billion US. So this is a heavyweight, not a small cap. So who does Kioxia compete with, and how does it win? The global NAND market is a 5-vendor club. Samsung is number 1 at about 32% share. SK Hynix, including a US business it bought from Intel called Solidigm, is around 22%. Kioxia, together with its partner SanDisk, is around 20%. Micron is about 12%, and Western Digital, the spinning disk company that also has a NAND business, rounds it out. So Kioxia is solidly in the top 3. And here's the interesting part. Kioxia and SanDisk don't actually compete on production, they share the same factories. Their 2 main fabs, short for fabrication plants, are at Yokkaichi and Kitakami in Japan, and the 2 companies split the output. That's a huge cost advantage because it spreads the multi-billion-dollar investment over 2 customer bases. The moat, meaning the competitive advantage that keeps other companies from catching up, has 2 layers. The first is technology. Kioxia's current flagship chip is called 8th generation BiCS Flash, and a 10th generation is in development. The tech race is measured in how many layers of memory you can stack vertically inside a chip. More layers means more storage per square millimeter, and the 4 leaders are in a constant leapfrog on layer count. The second layer is capital intensity, how much money it takes to build a new factory. A leading-edge NAND fab costs $15 to $25 billion and takes 3 to 5 years to build. That's a brutal barrier to entry, and it's why only 5 companies in the world can do this. Even China's national champion, called YMTC, has struggled because of US export controls on the advanced equipment. But there's a real catch. NAND is a commodity, meaning the chips themselves are roughly interchangeable across vendors, so prices swing dramatically with supply and demand, 50% up or down over 2 to 3 year cycles. Kioxia's fiscal 2023 was deeply unprofitable when prices crashed. The most recent year was a record. So the moat is wide on technology but narrow on commodity exposure. What are the key drivers for the business over the past 5 years? 3 forces drove the story. The first is the classic NAND cycle from trough to supercycle. In fiscal 2022 and 2023, the industry went through a brutal downturn. Too much capacity, prices collapsed, and Kioxia lost money. Then in fiscal 2024, the cycle turned. Revenue jumped 37%, and the company swung back to profitability as data centers rebuilt SSD inventory and selling prices recovered. The lesson for a beginner is that earnings in this industry are not a smooth line. The second driver, and the most important one going forward, is the shift in AI workloads from training to inference. Training is the one-time process of building an AI model in a giant data center, and it leans heavily on GPU compute power. Inference is when that finished model answers questions for millions of users. It runs constantly on a much wider footprint of servers, and it needs huge amounts of fast storage to hold the model's data nearby. That second phase is structurally good for NAND. Kioxia's SSD and storage segment grew from about 991 billion yen in fiscal 2024 to about 1.36 trillion yen in fiscal 2025. And data center selling prices roughly doubled in the most recent quarter. NVIDIA, Dell, and the major cloud customers have qualified Kioxia drives for AI storage systems. The third driver is a corporate finance story. Kioxia was a Toshiba subsidiary spun out in 2017. A group led by the private equity firm Bain Capital bought it and took the company public on the Tokyo Stock Exchange in December 2024. Since that IPO, short for initial public offering, the first time shares are sold to the public, the company refinanced its debt, redeemed expensive preferred stock, and used record earnings to roughly triple its equity base. Net interest-bearing debt was cut roughly in half. So the company today is financially much stronger than it was as a private holding 2 years ago. To wrap up, Kioxia is one of 5 global makers of NAND flash memory, the chips that store data in your phone, your laptop, and the cloud servers that run AI. And it has spent the last 2 years recovering from a brutal industry downturn into an AI-driven supercycle, while also fixing its balance sheet after going public. As a learner, the 2 things worth keeping an eye on are the next generation 10th Gen by CS chip ramp, which will set the technology cadence into 2027. And whether the AI inference build-out keeps pulling data center SSD demand up faster than the industry can add capacity. Nothing in this guide is investment advice. It's a starting point for you to dig deeper on your own.